Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and it is the 28th of March, 2020. So, this past week is a very, very volatile week. It was a very solid up week despite the price action on Friday. But the fear that I have for many traders out there who have not lived through two bubbles as I have, this is my third now, it's very, very easy to get lured into the false sense of security that we're going back to normal, and we are not. We are in a new normal. We are in a bear market. And this is what I had to say on Thursday night Stock Charts Live. Cherry, you think a pop and a drop? Yeah, we'll talk about the technicals. And we'll talk about bear market rallies. All right, so let's get to, I see a lot of people joining in now. Good stuff. All right, so in bear markets, it's always easy to forget that, let's first take a look at the S&P 500. Let's go to a daily. Okay, so in taking a look at the S&P 500, we haven't been able to put together back-to-back up days, two sequential days, that's it, since early February. We just did that this week. Now we have been able to put in three sequential back-to-back up days. This is the strongest rally in the Dow Jones Industrial Average since 1931, these past 3 days. But remember what 1931 was. It was the beginning of the Great Depression. So your strongest rallies, you rarely do stocks crash up. When they do crash up, it's generally in bear market rallies. And it's during those times where you can get easily lured into thinking that, you know what, the worst is behind us. The Fed has our back. This too shall pass, meaning the coronavirus. For those that are very optimistic, I am. This too shall pass. But we are in a bear market. Companies have no guidance. You have Moody's cutting ratings on not just the S&P 500 names, but they're potentially downgrading the United States. You want to remember that you are in a bear market. And as we limp up higher here, and I'm being kind of flippant by saying limp up here, because we are injured. This is an injured market. And for all intents and purposes, it's broken. Now, we can continue up higher here we can go up to 2,800 on the S&P 500. Where you're going to start to see trouble is right here at this green dotted line. That represents your 20-day moving average. This acts as a declining ceiling on whatever you're trading. Generally, it'll act as a declining ceiling. Technical traders will use it as a indicator of as to when to get short and say, okay, here's the upper band of resistance. You can use this one here, but that's a little bit tight. I think we can go wider. We can use this for now, but I think ultimately we're going to have to adjust this. So right now, I'm eyeballing the green line as our first indicator, our first obstacle, that declining ceiling of as to where you're going to see sellers begin to move in, shorts moving in. People that need to sell, they've been holding out for top dollar to meet margin requirements, they'll sell there. If we get up and through this 20-period moving average, you'll hit this resistance level. But first, we need to get over the hurdle of A, getting through this resistance level, or will we fade? Will we fade to the 20-period moving average? I don't know. I'm not that smart. The market's going to tell us that. All right, so fast forward to Friday's close. I mentioned on Thursday Night Stock Charts Live that we would probably get a rally up into the declining 20-period moving average. We still may get there. Might we move up higher? Sure. Like I said in the clip, the markets will dictate when this bear market rally is over. But I could assure you that we have not seen the last of the selling in this market. Now, tomorrow night on Sunday Night Stock Charts Live, where we discuss the opening price action of the futures as well as some of the charts that we're going to be looking at as we proceed into the coming week and weeks to look to get short of this market, because there's a lot of money to be made here But if you're looking at growth stocks, if you're looking at Facebook, Amazon, Netflix, Google, you're looking in the wrong place. This is not a growth market. Again, we are in a bear market. You need to be looking at gold, the gold miners. And tomorrow night, I'm going to be going over why the gold market has disconnected from the gold mining market. And when I believe that the gold miners will begin to rally and rally very, very hard. A lot of money to be made there, and a lot of people ignoring it because they don't understand why the gold miners aren't rallying. I will explain it all to you tomorrow night. We'll review it on the charts, and we'll use historical data to illustrate why the gold stocks aren't rallying and when I believe they will begin to rally. So how was our week last week? We booked profits on, we'll come back to this chart, our utility position. We are long, we still are long, but we began to book profits yesterday, Friday, on the UTSL, which is a leveraged ETF, putting you long of the utilities. We were buying the utilities throughout the sell-off. And you can see that on Friday, we rallied up and into resistance, and then the selling began. We were stopped out roughly a third of our position at $22 per share. We also booked profits on roughly about a third of our position on the USLV. This is the leveraged ETF putting you long of silver. Huge gains here. We were buying it down here when nobody else wanted it. We had the gold-silver ratio, which is a ratio that measures the number of ounces of gold it requires to buy 1 ounce of gold, at all-time highs at 122. We couldn't ignore it. We began buying. It paid off. We're still long, and we'll look to get back in at lower prices. Hopefully, we get a pullback here, give us the opportunity, but you never know with silver. Very, very volatile. So hopefully we get more at lower prices, but if not, we still have a sizable position, and we'll enjoy the ride higher. Yes, we do send out alerts to members. Now, back to the S&P 500 and bear market rallies. Could this bear market rally be over? It's quite possible. Think about what happened last week. We were up, despite Friday's sell-off, over 10.75% on the S&P 500, a major move. And as I mentioned on Thursday Night Stock Charts Live, you have the 200-period moving average on a weekly basis immediately above, and it would act as resistance level. Sure enough, it did. We closed back down below the 200-period moving average on the spiders. So might this bear market rally be over? It's very possible. I wouldn't want to go shorting just yet. We'll be doing some analysis with members this weekend on the Week Ahead Commentary, where we discuss under what circumstances do we want to begin shorting this market again? Because we are not being delusional. We will not believe when the talking heads come on CNBC and they say, go buy stocks now, the Federal Reserve's got you back. No, we're not going to do that. We're going to use technical analysis. We're going to use historical data, and we'll trade the market on our terms. Avoid the talking heads on CNBC, and join us tomorrow night, Sunday Night Stock Charts Live, 6 p.m. Eastern Standard Time. Click that subscribe button, please. The like button would help out a great deal as well. Everybody enjoy the remainder of your weekend, and please be very safe.